This interview is brought to you by Transformational Mortgage Solutions. You can check out the full episode at LykkenOnLending.com.
Welcome to the Hot Topic segment today. I am excited to have Steven Cooley joining us. He's founder and CEO of Art versus Math, and it's a hyper-creative, numbers-based advisory firm. I love how Andy teed this up for you, Steven. It's good to have you here.
Yeah, thank you so much. I really appreciate you having me. Yeah, if I ever need a commercial done, I mean, Andy pretty much hit the nail on the head.
And one of the things that he and I talk about all the time, we're both musicians and we're both artists, yet we work in this. I mean, I thought it was like as crazy. Did I find like the worst industry I could possibly get in? You know, because I am more of an artist. I'm wired like that. And yet the skills when it comes to art are very much applicable in the discipline world of math and mortgages. So I was really thrilled when you and I met last year. In fact, it was just about a year ago you and I met in San Ramon, California. We are both attending the Social Surveys Conference, great conference. And you and I jumped on we were heading to the airport together, and I saw you standing there with your luggage. I said, "You want to join me?" And said, "Sure, let's go with whichever Uber gets here first." Mine got there first. You jumped in mine, and you canceled yours. And it's starting to be a good friendship. So I'm really thrilled to have you here talking with us. Another data point that I want to give our listeners as we get into our talk today, discussion is you were formerly the Digital Marketing Director for Finance of America and Finance of America Reverse, for the reverse mortgages.
Correct.
And they got out of the business. And it's not an unfamiliar story, Steven. A lot of people saying consumer direct's not working for us. We had to shut that down. And I couldn't disagree more, yet I know it's not being done because they just don't like it. It's because they're not getting results. So I'm really thrilled to have you here, and I'm thrilled to have you join Andy and I and the many others who are out there in the consulting world, joining us in the consulting space. And people say, well, why would you have a competitor on? Well, I don't see it that way, folks. I see it as, first of all, we're here to bring you information, listeners, but we're thrilled to bring anyone who works in a way that plays well. We all play well in the sandbox of mortgage together. And Steven, it's an honor to have you here with us. So I'm really excited to get into this. So let's start off by this. Would you explain why you named the company Art versus Math? And I guess it's expanding on what Andy already teed up.
Absolutely. Yeah, I mean, Andy, like I said, did a really, really, really strong job articulating exactly why I named it that. I was in a former life, I was a signed musician as well.
You were a what? Did I hear that right?
I was I was a singer-songwriter. If you go on iTunes right now and Google Steven Cooley, you will find my album. So, I've been singing and playing piano, since I was 5 years old, so the creative
another
part
musician in mortgages.
I know. Well, and especially in marketing, I think you'd be hard pressed not to find a marketer that doesn't have a creative acumen, even if it's like painting miniatures or something, very niche like that. It's just impossible not to have a creative side to you when it comes to that. And that's where it gets interesting in business, because you have these two dynamics. You have numbers-heavy people and you have creatives. And sometimes one's more accurate than the other, and sometimes it's hard to tell what's going to perform the best. And oftentimes in business, my experience has been that there is a deficiency in one or the other. And so my area of expertise is, strategy and business intelligence, and helping businesses understand how all that applies to their business objectives.
That's excellent. And, obviously there is a void when you're in the industry, and I would like to have you just briefly share how you're filling that void in the marketplace, especially with your services. We'll give you a chance to put a little plug in there for yourself. Then we're going to get into digital marketing.
Digital marketing is, commoditized at this point in our business, right? Everybody is participating in some capacity with digital marketing. They have a website, they're on social media, they might be doing some paid advertising. Everybody is doing something online. You have to be consumers. That's where the consumers are finding who they're going to do their mortgage with. So now it's about understanding how much money do I spend on paid advertising? What do I put online? Why do I put it on there? What are our actual objectives? You talked about direct to consumer versus maybe business to business. Are those engagements the same? Do we have to build the same digital online assets to reach, each of those categories? So I think there's some misunderstandings about what's needed to be done to reach our audience, and it's hard to navigate. I mean, you have a couple people talk about technology and AI and machine learning, and there's just so much resource available to mortgage companies at this point. Plus, you have your Facebook, like lead gen guys. You got a bunch of independent like lead gen folks going, I can help you grow your business. And so it's very, very clustered out there, and it's hard to understand, what is needed and where the investment needs to go, and what we need to say to actually engage our audience. So it's a tall order, and I'm hoping to help fill that void.
Well, don't doubt it. You and I had the most fascinating ride to the airport, and I really enjoyed our conversation, and I'm so glad we finally got it where you were on the podcast. So thrilled to share it. So let's start off with this. How has digital marketing impacted the mortgage industry? Digital marketing we know it is, but from your perspective, How is it doing it?
There are many conversations that a mortgage company has to participate in to really capture their audience. And it's very similar, and it's probably the first time that you could actually cast the widest net. Not the first time, but you're able to cast a very wide net to reach your consumer at this point. I think the number's like 73% of consumers look at a third-party resource before they make a buying decision. And so you have your bank rates and lending trees and Zillows and even Realtor.coms, and you have all these different variables that are important to have some sort of engagement or listing or some sort of commentary on somebody's platform. And so there's just a lot of options and listing reviews and online reputation. Online reputation has had a huge surge over the last 10 years. And understanding how to navigate that online reputation to make sure that you're, kind of separating yourself from the market. And then on top of all of that, and Alice will be able to appreciate this, you have to do it compliantly. You have to somehow distinguish yourself. You have to somehow articulate, your company message and what you offer in a way that does not make the internal counsel or compliance officers however you navigate or govern your compliance when it comes to advertising. You have to figure out a way to creatively reach your audience, and it's a challenging endeavor to say the least. And I got to do like these weekly meetings almost, and you put up this campaign, and you might be super pumped about it, and nobody will approve it because there's just a couple tidbits of it that that are concerning. So that is the impact today that I probably, and even maybe the deficiency I see with digital marketing within the mortgage industry is it's gotten a little dull. It's getting a little hard to really...
You know who's at fault for that? All the compliance people. Everyone that's compliant. I'm teasing Alice. She's training.
Well, I don't think it's Alice's fault. I don't. I think that it's hard to understand what I'm able to say. But the other thing is that if I believe that pushing product and services is the way to reach my customer, then it's probably my fault, right?
Yeah.
I don't know.
Well, and I agree with you. I'm being facetious, but I do want to get Alice in here real quickly, and then we're going to go over to Alan and get some questions. But let's go to Alice real quickly. Alice, your thoughts on the compliance side of this, because I'm teasing you. It's getting boring because of all the compliance people out there. I'm getting hate stares and hate mail already from the counterparts. But Alice, it's one of those things where we do see that compliance has got to get factored into this, and there are some limitations. What you guys are starting to make a more significant stab into digital lending, consumer direct.
Yes, and absolutely. I'm going to apologize. Something's going on with my phone where it won't come off the speakerphone. So if I sound a little hollow, I'm pushing buttons and nothing's happening. Anyway,
that's right.
The one thing I guess that's coming out from a compliance standpoint is, and just in general, is that whole branding, because the issue is the LOs want to reach the customer. They feel that they know what the message is that their customers need to hear in their own personal brand, and trying to balance that with a corporate brand. Is that even possible? So can you let LOs have their individual branding and still work at a corporate brand and still stay in compliance? Because the LOs want to they got to move fast, right? They want to get stuff out today. They want
100%.
their own articles. And how do you check all that and keep it under control? the corporate brand?
There are some no-nos in the world of marketing compliance that, you can't talk about rate. You can't say that you're the best mortgage, company on the planet, or you can't give guarantees. I can't tell you that, this mortgage is going to change your life for the better, or whatnot. But the way that, branding a individual, whether it be branch or LO, works and works with compliance is getting interpersonal. I mean, I think, and telling that personal story that doesn't necessarily have something to do specifically with product, specifically with mortgage, just leans into it. When you specify that you're the experts, you need to kind of act like it. I think that that is 100% true. In fact, I put a post out that recently saying the first time you're actually doing online reputation is when you put your job title out there, right? So I mean that is the personal brand. Is not so much that you have to talk product, talk mortgage, and give guarantees and whatnot. You can actually tell a story without saying a single trigger term or even mentioning mortgage, and definitely get in front of your customers.
That's really good. Alan, shoot away, fire away.
Really, the first part of it is, what should a mortgage company be doing with their digital marketing? And maybe you could even talk about not only what they should be doing, but what about the folks that they're spending money everywhere and they're saying this is another expense. So maybe you can just help by saying, what should you be doing and how do you get in the game? How do you get started if you don't already? And then the second question, which you may just want to go right into, is what would you say to people that already have a staff?
What should you be doing in digital marketing is a pretty loaded question. You got your website, you have your social media. I think mortgage companies a lot of times feel social media is like this black hole of spending, and then a lot of times it is. And so really it's about what strategy should they be implementing against their digital marketing, right? What strategy, what approach should they be taking to reach their customers online? So, I mean, it's not a matter of if they should be doing digital marketing or what. Of course they should. That's the commodity.
Yeah, so that's an old duh, right?
Yeah, the internet's not bad, right? I mean, so it's not if. So the one thing I would say today that is, that would touch what Alice is saying and kind of lead into what your second question is they need to be telling a really, really good story. There's a reason why Snapchat blew up. There's a reason why stories now are on Instagram and Facebook, and that type of digital marketing is the forefront of what's going on. There's a reason why video is a big deal. And it's because it's a really awesome way to tell a story. And so figuring out how to tell a story, and you have a micro stories and you have macro stories, and figuring out how it ties into your brand and reinforcing it with paid media, social media, display marketing, email marketing, pick your favorite service and reinforcing it and figuring out how to optimize against it.
Say, one of the things you bring up, micro, macro. Before we got too far away from that, and then I'm going to you, Andy Schell. What's the difference between micro? Is it just purely the length of the video if you're doing video, or the audio file? Is it just the length of it?
Yeah, everybody gets together at the beginning of the year, and they put together these amazing company goals that they want to accomplish. They put together, they're moving towards a culture. There's all this personality. We're hiring. We have all these variations of storytelling going on, and then we walk away from that meeting, and we don't tell the story for 3 months again. We don't touch it again for 3 months, and then within that, you have just tons of cool stuff hopefully going on in your company. And so there's all this really actionable content that we witness every day that has to be digitalized, has to be spoken about, has to be, because that is the true brand of your business, right? I mean, that's the thing that separates you. And if you don't have a differentiator, I mean, what difference does it make what mortgage company you use?
Andy.
Hey, Steven, thanks for connecting again. So here's the deal. It's sort of a two-part question, and it kind of comes back aligned to how and why. So what I'm wondering about is you've made a number of recommendations about how companies should manage digital marketing, and that would be your recommendation is based on some sort of measurement. So I'm curious to know, how do you measure consumer behavior to know how to provide the recommendations that you do? And connected with that, within the measurement of consumer behavior is the response rate, or some level of knowing you do this, XYZ will happen. And if XYZ happens, then that drives a result. And the result drives financial performance, which drives an ROI. So I got to throw in a little bit of the CPA stuff, because I love the fuzziness, but I also, you got to show me why. So
show me the math.
Absolutely.
Yeah. So if you could tie that together for me.
Sure. So my philosophy around marketing is digital marketing should create one of three things for a business. It should create direct revenue, it should create attribution, or it should create efficiency. And so when you're trying to figure out what your key performance indicators are, KPIs, and somebody might need to figure them out for you or identify them for you, and they're going to be tied directly to your business objectives, you should be looking and maybe even categorize and separate out, okay, this is because storytelling's not necessarily going to drive revenue, right? I mean, if I tell a story or whatnot and I get eyes on the story, that doesn't necessarily mean that those impressions are going to turn into direct revenue. However, they could turn into attribution. It could be a touch point in the buyer journey. And attribution is by far the hardest number to aggregate to understand how it's impacting your direct revenue or any types of efficiencies. And so as you develop out your KPIs and you make these distinct, kind of understand your conversion points. You have your front-end conversion points, meaning that they are showing up or they're looking at, they're viewing your site. Then it's important to track that through to understand when they're coming back, what else are they touching, what other assets might they be engaging with, and then moving them into possibly a nurturing campaign or whatnot. And then ultimately getting those folks to drive and figuring out if you have a buyer or if you have a nurture candidate or MQL or an SQL. And then efficiency-wise, same type of challenge. Are some of these things or technologies or software or advertising helping us save time, helping our loan officers do what they're good at, and, working in the background to help them, ultimately, help their customer find what they need.
Perfect. Exactly. That is so great, because there's so much to unpack in all of that. And I look forward to talking to you more about this. Good stuff. Thanks, Steven.
Yeah, I'm interested in getting into the content. When you talk about content marketing, I mean, this podcast is content marketing. There's so much. That's such a broad character. Andy doing the webinar with the MBA on accounting, the basics of accounting, is content. Talk to us about that. I mean, what are some of the things that you find working, that's not working? Give us your insights.
Right now, of course, everybody is leaning towards the trend, and I wouldn't even call it a trend. It's probably going to be the new norm, which is video, right? Podcasts also coming to the forefront as a huge content opportunity. You have 30 to 60 minutes to uniquely, talk to your audience base. And so with content, I've always tried to separate it into three categories, which is awareness, consideration, and then decision. And so with content, your basic, 101 content strategy must encompass one of those three things. And again, it's to take them through the buyer's journey, providing content to get their attention, providing content to make them consider, your product offerings or your brand or your company to help them make a buying decision. And then ultimately, the content that drives the decision, you answer the tough questions.
Yeah, right.
The only way to figure out what works is to consistently try. And, content marketing, company budgets is increasing every single year. I mean, there is no shortage of budget when it comes to content, because it is, I heard somebody say data is king. Well, I would say content is king. Yep. The more opportunities you have to capture your audience, the better.
Alice, do you have any questions at the top of mind here that come to you as you guys are, I know what you're doing over there at Union Home. Any thoughts?
Well, I think you've answered several of them, but I think, so is social media in your eyes, we've had others on the show talk about, the branding and the messaging, but you are definitely sending a message that's going a lot farther into how to get someone to actually act on that and make a decision. So what do you find makes the difference? You talked about storytelling. What else can really have a consumer make a decision to move forward and do business with you?
Social media tends to be the gasoline to the fire. Your product and what you offer is, especially in the mortgage business, is a little commoditized as well, right? There's an author here in Bloomington, Indiana. His name's Jay Baer, and he has this cool book called Hug Your Haters, and he gives this line that I love. And
Hug Your Haters? I like that.
He says, customer service is the new marketing. And so when you're talking about buyer's decision, a couple things usually happen. They go through a buyer's journey, and then there is some sort of advocacy that occurs for the brand or the product or the actual company. And that advocacy either comes from an online reputation, or it comes from a direct experience that their friend or family or colleague has provided them. I mean, that advocacy and that recommendation, whether it be online or it is as the result of someone they've come in contact to, is the probably the highest conversion point that we can find.
When you're advising someone on developing a content marketing strategy, what are the things you're telling them?
I want to hear about empathetic solutions to circumstance in content. I don't really want to hear about product at all. Very little.
Very interesting.
If I can uniquely empathize with a consumer's circumstance, and I'm talking about the nuances of not being able to put together the down payment, or the nuances of being self-employed, the nuances of wanting to buy a home and renovate it, and trying to understand how that funky 203k loan works. And if I can read my consumer's mail, if I can talk about the fears of being a new parent and buying a house and moving with a baby, if I can reach them at that level,
I see.
I don't necessarily have to talk about product to drive it home. I can get on their level really fast, and I can almost create a lukewarm conversation right away.
Yeah, it's good connectivity. Alan, I want to get into reputation management, but before we leave content, do you have any questions?
No, I will I will agree with you. It's not, and I've said this in the past, it's not always about product. A lot of people say, sell the inventory, sell what we have today. It is about empathy and relationship and educating the borrower, and we talk about that so much. So it is not about software and every single feature and what technology you do and don't have, but it's about the relationship and the experience that you provide.
Yeah, that's good. So you and I met at the Social Survey event last year, which is a reputation management company. They do a great job out there. There's some others that do it. We have a bias towards them because of our friendship with them. But talk about the digital marketing related to the mortgage industry and the importance of reputational management.
The biggest challenge with reputation management is where to have it. I mean, you have quite a large variety of places where you can be reviewed, from Zillow to LendingTree to Consumer Affairs to Social Survey to Google to Yelp. I mean, there are just so many different avenues and places where consumers can show up, and and it's based on whatever their preference is, and rate their experience. Online reputation's getting, it wasn't as consumers are articulating much more online than they ever have before. And this, working in the reverse mortgage space, that is especially true.
Really?
That's interesting. Seniors have no problem going online and telling you what they think and telling you what their experiences was like, and sharing that.
What is the ratio of bad reviews to good reviews? Is there any statistics that you're aware of out there on that?
No, I'm not. I mean, I do know this though. The bad reviews are where it all happens, though. I mean, the bad reviews are the gold, and I mean I think the biggest misstep that I see is just that's kind of overlooked. I mean, the consumer behavior, if you're going to go buy a TV on Amazon and you are shopping and you find the TV you want, it has, 2,000, reviews and it has 4.4 stars, and you start to look for the reviews. I mean, you look for the bad ones. You don't look at you don't go and look for 5-star reviews.
Yeah.
I want to know what the worst case scenario is of what could happen with this TV I'm going to buy. And now let's move it into this huge purchase I'm about to make that's going to change my life. And all I can find is 5-star reviews. And the truth of it is we're shorting our consumers by doing that, by not really showing and creating that true transparency. I would love to see on Social Survey loan officers put out one of their 1-star reviews and then a response on how they handled that situation. I mean, we're not all functioning at a 5-star. I mean, as you are, God bless you.
I heard someone say that's really where the magic can happen, is how you respond to the 1-star reviews that really creates them. And otherwise it looks so photoshopped. And you look at Facebook and everyone has their perfect life posted up there, and you find out you look below the surface, you go like, you don't have a perfect life. When I look at Facebook and I look at your real life, I'm not talking about you, Stephen, I'm talking about people out there,
right.
The people I know, you go like, this is not the same person. Yeah. Well, I think there's all this posing, and people are putting such a high premium on authenticity. It's like the mortgage industry is fraught with lots of challenges and lots of setbacks. We all know that. Be honest and real about it, authentic about it. Tell me about what you did to overcome that problem, and I think that's just so good on it. So I'll let you put a bow on that after we wrap this, so we can wrap this up. What are the most important things that you're recommending in a digital marketing strategy? If listeners, pay attention to this. This guy knows what he's doing.
I think the first thing is to make sure that you have one. I mean, there's...
That's a good place, yeah. Obvious to start and have one.
I think that is probably the biggest... If I took a survey of in the mortgage industry, what's your digital marketing strategy, I think you'd be hard-pressed for somebody to put a piece of paper in front of you and say, this is what we're doing. I think that they could arbitrarily tell you what they're doing. But I don't know if there's strong objectives against the things that they're participating in. I mean, again, I know I'm supposed to do this. I know that it's important because the interweb tells me it's important, and I know that consumers are shopping online. I know that they're participating and trying to figure out what to do and educating themselves on product. But I really don't have an articulate strategy to reach them. I don't have an articulate strategy around my budget, how much I should spend. And I really have no way to measure this and understand what these measurements mean to my business and if it is creating direct revenue attribution or efficiency within my business. So I think that's right now one of the most important things that a business should take into consideration when it comes to digital marketing strategy.
Good. Andy, you just texted me a great comment about an article you shared with me. Go ahead, talk about that. Authenticity.
There's a bunch of academic studies on authenticity and how it's like going to the used car lot and someone says, oh, this is an awesome car, it's perfect for you. Well, there's already a sense of, well, they're selling me something. But when it's a close relationship between an employee and an employer, there's supposed to be a sense of trustworthiness. And the trustworthiness factor is the thing that is super important, and it can get built and it can get destroyed even more quickly. And how you do that is built around ethics. It's built around, like Dave was saying, honesty. It was built around not being manipulative. There's just so much to all of this, but Steven's got so many great points, especially like the having something's better than nothing, but at the same time, don't just guess. Get someone like Steven to help you figure out how to do it right the first time. Because don't be random about it. It's going to just feel like you're wasting money. Do it in a way that actually drives an ROI.
Yeah, that's so good. Okay, we got to wrap this up. Steven, what's your thoughts as you close this out?
I really appreciate it. This was a great experience. I have not done I have not gotten to do an interview thing since I was, like I said, I signed a long time ago. So really excited to be in business and to participate. And, I'm looking forward to tackling some big challenges. So I appreciate it.
You did a good job, but thank you for coming on and being willing to do so, reaching out. You stayed persistent, which is one of the things you need to do, folks. If you're going to be there, do what Steven did. I had forgotten. He had to reconnect some dots. When you get to be 69, my age, you can lose the dots sometimes in between. He goes, "Hey, don't you remember we met on the car?" I go, "Oh, yeah. Then we got into it, and then it got really exciting again." But, Steven, I want to say thanks so much for taking time to be here. I wish you all the success in the world. We do want to have you back as we talk about that. We're trying to get listeners, Amy Moses, to come on. We're negotiating with her company to have her come on and talk about this. She's with MERS, and we're going to get her talking about digital marketing. But next week, we've got Ken Jones talking about Andy's my favorite topic. Well, it's all of ours. It's leadership. He's the president of ResX Warehouse Lending, a division of United Bank, and he'll be here next week. We're going to be talking about leadership from a warehouse lender's perspective. Thank you so much. I want to say a special thank you to our sponsors, Black Knight, Open Mortgage, Finastra, ResX Warehouse Lending, a division of United Bank, the MBA Lenders One, the Mortgage Collaborative, CMLA, the Community Mortgage Lenders of America, Velma, Knowledge Coop, Vidyard, and AI Assist. If you're interested in becoming a sponsor, go to our website, Lykken on Lending. Have a great week, everybody. Look forward to having you back here as a listener. And tell someone else about this. Share this podcast on social media. We appreciate it. Thank you.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.